Welcome to the insurance law portion of the course. We will continue on here. Depending on your exam you're going to be taking in Texas, you could have anywhere from 10 to 30 questions coming out of the law portion of this course. Now, we're only going to cover in the video segment the first portion of the law part of the course, which is called Section 1, Texas Insurance Regulations. If you're taking the life and health course or property and casualty course, there's going to be subsequent sections that are self-study in the law area. But if you're taking, for example, the Texas Limited Lines course, this is the only law portion that you're going to need to cover here. So this section really covers the basics of Texas insurance law. We're going to learn about how insurance is governed, who's involved here, about licensing in Texas, continuing education, guarantee associations, things of that nature. We'll go ahead and get started here right on page 1. The top we have the heading licensing. I suppose before we get into this, we'll cover what this is all about here. Now, in Texas, the insurance law is enforced by who's referred to as the commissioner. And the commissioner is head of the Texas Department of Insurance. So this commissioner is actually appointed by the governor of Texas to a 2-year term, and they are the head of the Department of Insurance in Texas. The commissioner is responsible for enforcing all the Texas insurance law, which is sometimes referred to as Texas Insurance Code. So if you want to sell insurance in Texas, and here's my box to represent Texas, it's a big box though. You want to sell an insurance in Texas, you have to get a Texas insurance license. Depending on what you're going to be selling, it's going to determine what license you would need to obtain. Luckily, there's now no longer a pre-licensing requirement in Texas. So anybody who wants to can go down and take the exam without having to take any pre-required courses. Thank you for registering with for our course. We're going to help you get past the exam the first time. Now, this license you're going to get is a state license, not federal. So it will only allow you to sell in the state of Texas. And it's referred to as a resident license. Resident license. Now, you can only have one resident license, and that's the state where you reside. If you wanted to sell, so you get your resident license in Texas, and you wanted to sell in Florida, would you have to get licensed in Florida? Yes, you would have to get licensed in Florida. And they would refer to this Florida license as a non-resident license. Non-resident license meaning you don't live in Florida. You live in Texas, you've got your resident license there, you want to sell in Florida. You have to get a non-resident license in Florida. What do you have to do? What's required to do this? Well, pretty easy usually. You just have to submit to Florida, to the Department of Insurance there, that you're licensed in Texas in good standing. Also, you're going to have to pay a fee to Florida, to the commissioner and the Department of Insurance there, and they want you to fill out a form, non-resident license application form. So you have a question on the exam. Is selling with a non-resident license illegal? No, it's required. If you want to sell in Florida and you're a resident licensed agent in Texas, you've got to get a non-resident license in Florida. It's required by law. You have to get it to sell. So selling with a non-resident is not illegal. Same thing as if somebody lived in Florida, they're a resident there, and they want to sell in Texas, they have to get a non-resident in Texas. Is selling in Texas with a non-resident license illegal? No, it's required if you live out of the state. So these are some of the things that we're going to be covering in this section. Not a whole lot of concept stuff, but as we go through the section, I'll be able to point out where you're most likely to see your questions coming from here. So we go in the book, page 1, we start at the very top under the heading licensing. The commissioner is responsible for making sure those people applying for the license meet the requirements. Some requirements, you have to be a minimum age, 18, you see there. Second one, you have to be a resident of Texas. Third, pass the required exam and pay the required non-refundable fee. 4, file the proper application, submit the fingerprint card. And last one, shall not use a license principally for the purpose of selling insurance to themselves. This is called controlled business, and it is illegal. Can you sell insurance to yourself? Sure. It just can't be all that you do. You have to sell to the general public. That's the reason you got the license. Commissioner may refuse to issue any license if he finds misrepresentation or fraud in the application, record of dishonesty or misappropriation of customer funds. Applicant is incompetent or lacks moral turpitude, whatever that means, but you're an immoral person, like maybe Mike Tyson fits in that definition, I suppose. Record of suspension or revocation in any other jurisdiction. Applicant has been convicted of a felony. So they're talking about these commissioners. There's actually a national association. It's called National Association of Insurance Commissioners, NAIC. And they share this data throughout all the states. So if I get licensed in Arizona, we'll say, and I screw a bunch of people over, rip them off, and I leave Arizona, I come to Texas and I try to get my resident license there, they're going to find out if my license has been suspended in Arizona, and they're not going to allow me to get a Texas resident license. So obviously they share the information to protect the public. Bottom of the page, types of licenses. Agent license. Now remember, as an agent, you represent the insurance company. That's who you get paid by. Insurance agents, synonymous term is producers, but on your exam they will use that term agent. And obviously you have to have an insurer appointment, which we know. We go on to page 2. Some other types of licenses that we may see. Adjuster license, that's a property and casualty related license. 3, surplus lines broker. It's what, if you want to represent companies like Lloyd's of London, you have to get a surplus lines broker's license in Texas. Before you can get that surplus lines broker's license, you have to first hold a property and casualty license. That's one of the requirements. 4, managing general agent. That's somebody who's a full-time manager at a company and they're responsible for hiring, training, and supervising agents under them. Required to be appointed and licensed as a managing general agent. Number 5, non-resident agents. What we just talked about, they don't reside in Texas. They want to sell in Texas, they have to get that license. 6, temporary license is what it is. There's some requirements related to it that you have to take certain courses in order to get a temporary license. You guys, once you pass your exam and you get your license, it's going to be a permanent license. So we can go ahead actually on to 3. And here's where we see some more stuff that'll probably be on the exam. Top of the page, maintenance and duration of licenses. Number 1, second paragraph. Your license will expire 2 years from the date of issuance. So in Texas, our license period is 2 years. The next paragraph, continuing education. Do you have to complete continuing education to renew your license in Texas? Yes. You have to do 30 hours every 2 years within your licensing period. Included in that, 2 hours related to ethics. So what is continuing education? Well, it's not enough just to get your license. In order to maintain it, in Texas, you have to complete continuing education credits. Now here at the school, we also offer online continuing education as well. I think it's like $40 and you can get all the CE that you need to renew your license, and that's it. So it's not expensive. You take an open book exam, you submit the exam electronically to us on the internet. It's graded immediately. We certify you and notify the state. So it's not a big deal. But you've got to do 30 hours every 2 years. 2 of those hours included must be related to ethics. Every state's going to have a different continuing education requirement. Some states don't have any at all. Most states do have some, and most of the states are reciprocal. What I mean by that is if you've got your license in Texas and non-resident in Florida, you don't have to do CE here and CE in Florida. You just prove you did it in Texas, submit the reciprocal agreement to Florida, and you're good. All right, then it starts to talk about, one thing about exemptions is if you've held your license for a minimum of 20 years, you are exempt from the CE requirement. So it's not really going to help us out if we're just getting our license, but those lucky people who have held their license that long are exempt from the CE requirements. The next paragraph you see there on page 3 says the commissioner may accept a renewal application up to 90 days late if accompanied by a late renewal fee. If a license has been expired more than 90 days but less than 1 year, the license cannot be renewed. However, a new license may be obtained without exam, subject to a late fee. After 12 months, all applications are considered new and candidates must take the exam. So as a review, your license can be renewed up to 90 days late by paying a late fee. After 90 days, you cannot renew your license. However, you can get a new one. If your license has been expired more than 90 days, but under a year, you can get a new license without having to take an exam. You just have to pay the fee. After 12 months, your license has been expired, you want it back. You can't get a new one. You have to get a new one, but you have to take the exam before you can get it. That's a little bit confusing, isn't it? But that's the way it works. 2, reporting change of address, which may be on the exam. administrative action or felony conviction, the licensee shall notify the commissioner in writing on a monthly basis within 30 days of any change of address. So if anything changes, you've been convicted of a felony or a misdemeanor, or your license, your address changes, you have to notify the commissioner on a monthly basis. It says here, they mention within 30 days. Disciplinary actions. Number 2, cease and desist orders towards the bottom of page 3. If the commissioner finds a licensee is engaged in a prohibited act, he may order such licensee to cease and desist from such practices. Here's where you might see the question on your exam. Maximum penalty for violating cease and desist is $1,000 per violation, total of $5,000 for all violations, max. We can go ahead to page 4. Second paragraph on page 4, appointment. Commissioner will suspend an agent's license if he does not have a valid appointment with an insurance company. So when you get your license, you have to be appointed to sell. The insurance commissioner wants to know at all times who you're working and selling for. State regulations, second paragraph, commissioner's general duties and powers. We said, how does the commissioner get into office? Appointed by the governor. How long is the term? 2 years. 2 paragraphs down, requirement of the... And remember, the commissioner's job is to protect the insurance purchasing public and to enforce the Texas Insurance Code. 2 paragraphs down, the commissioner shall examine each authorized insurer annually for the first 3 years of their existence and not less than once every 3 years thereafter. Highlight that. Now they're talking about every authorized insurer. Authorized insurer would be any insurer that's licensed in Texas. So they mentioned their first 3 years, they're licensed every year. Thereafter, once every 3 years. A lot of work, but there's a lot of people that work with the commissioner at the Department of Insurance. Company regulation, number 1, certificate of authority. We're talking about insurance companies. Just like you have to get licensed, they have to get licensed to sell as well, as we just mentioned. Now, once they get licensed, they're referred to as an authorized or admitted insurer. And there are certain things they have to submit to the commissioner in order to get this license. So say they have to file for approval their rates, policy forms, post initial required legal reserves to pay future claims. There's only 2 exceptions to the rule of having to get licensed in Texas, and that is surplus lines insurance and reinsurance companies. They are not required to be licensed in Texas. They're exempt from the licensing requirement. So they're actually referred to as unauthorized or non-admitted insurers, but they're not required to get licensed. They're exempt. We can go ahead to the next page, page 5. Number 6, unfair claims settlement practice. Put a star by this. You could have 3 to 4 questions on these bullet points here. Common sense. They ask, which of the following is an unfair claim settlement practice? Or which of the following is not? Or all of the following are unfair claim settlement practices, except, remember, they love to do those on the exams as well. Number 8, payment of commissions. Can you share a commission with your customer? No. Can you share a commission with anybody? Yes. Only if that person is licensed and they hold the same line of license you do. Center of the page, agent regulations. Number 1, unfair trade practices and fraud. Again, another, 4 to 6 questions under unfair trade practices. You've got to know what these things are. Letter A, misrepresentation. Obviously, we know what that is. Put a star by the first bullet point. That is a misrepresentation. B, false or deceptive advertising is what it is. C, defamation. Defamation is making false statements orally about the financial condition of another agent or an insurance company. That's defamation. So that's an unfair trade practice. Boycott, coercion, or intimidation. Basically, we know what boycott. Coercion is, here's what coercion would be. You come in to get a loan from me. I work at a bank. And we sell insurance for loans, called credit insurance. And I require, in order for you to get the loan, I require you have insurance. That's not coercion. Here's what coercion is. I require not only you have insurance, but I require you buy it from me. That's coercion. I can't require you buy it from me. You can buy it from whoever you want. It's a convenience factor, though, that I sell it and you're getting the loan from me, so you're probably going to buy it from me. But I can't require you to. That would be coercion. Results in an unfair restraint of trade. E, false financial statements, obviously. F, unfair discrimination, sure. G, unfair sex discrimination. H, rebating and illegal inducements. Okay, here's one that we'll go a little bit further with. Rebates in insurance are illegal. You can't do it at all. You sell cars, rebates are fine. They're legal in the auto industry, but not in the insurance industry. They're against the law. Now it says here though, dividends paid out of accumulated surplus are not considered rebates. Obviously, dividends aren't rebates. They're a return of profits of the company with the policyholders. All right, now we go to the next heading, Insurance Information and Privacy Protection Act. This is a big one, and this actually applies to any company that is obtaining your personal private information. So you got a credit card, they've got your information. You got a bank account, they've got your information. You have a car loan, they've got your information. They have to follow these laws as well as insurance companies do. Now, questions you see on the exam is about this privacy protection notice, when it has to be given out. So you see it's underlined in that first paragraph there. When new insurance is being sought, this notice must be provided at the time of policy delivery at the latest. In the case of renewal, the notice must be provided at least annually. Okay, so somebody buys a policy from you, new customer. When do you have to give this notice to them? At the latest policy delivery. So it would just be included with the policy. How about current customers? At least annually, generally sent out with their renewal. So you get these little deals in the mail all the time from banks. Anybody that has your private information has to provide this to you. You look at it, throw it away. Well, same thing with insurance companies. They have to follow the same rules. Page 7, top of the page. Now we get to the guarantee associations. Now the guarantee associations, here's what the guarantee associations are. And keep in mind, if you're taking the life and health or property and casualty exam, this information will be in a different law section. But we'll cover it here anyway because everybody's got to hear it. It's on all the exams. Guarantee association is a state fund. It's a state fund that provides protection of policyholders of insurance companies that go broke. So if I have my life insurance with a company and I have a cash value there and the company goes belly up, how am I going to get that money back? Well, I can turn the claim in to the State Guarantee Association. Is the coverage unlimited? No. There are dollar limits under the state fund. Second question, are variable life insurance products covered? No. Only fixed products. And what is it covering? It's covering the company. The insurance company goes broke. That's what it's covering. Where does the money come from in this fund to help pay these claims related to these bankrupt companies? It comes from every licensed insurance company in Texas. Remember we talked about the certificate of authority briefly there? In order to get that, you have to join this association. And the insurance commissioner requires that you put a certain percentage of the premiums that you receive into this fund. It's a requirement to keep your license. So that's about all the information. And the last thing, remember, you have to know it's not unlimited coverage. They list the coverage amounts in there, so highlight those as they're underlined. And also on page 7, we have this heading, Federal Regulation. Now, insurance is primarily regulated at the state level, although there are some federal laws that will apply in the insurance industry, such as the Fair Credit Reporting Act. What does this apply to? Well, this applies to any time the insurance company is going to obtain a credit report to help identify the risk that the applicant is posing to the insurance company. A lot of insurance companies are doing these credit reports these days. Now, if they're going to do it, they have to follow the guidelines under the Fair Credit Reporting Act. They have to get prior written consent from the applicant before they can obtain the copy. They're not required to show the applicant a copy, but they are required to tell the applicant where they can obtain a free copy. If there is anything incorrect in the credit report, the applicant has the right to notify the Consumer Reporting Agency, and the Consumer Reporting Agency is required to do an investigation and fix any errors that are included there. Let's see what else we've got. Okay. Now we've also got the next bold heading, telemarketing sales rules. This has been on the exam. A couple questions related to this. I'd say 4 maybe at the most that you'd see on your exam related to this. I know it's a lot, and it is very important. So we'll take a look at this up on the board. the 4 questions that you'll most likely have related to this. Okay, under telemarketing sales rules, when can calls begin? Calls begin 8 a.m. Question 1. When do calls have to end? Calls have to end 9 p.m. What information, well, this is related to the telemarketing sales rules, but it has to do with the do not call list. Next question, what information is found on the do not call list? Answer is phone numbers. Not social security numbers. So they might ask it 2 different ways. They might say, which of the following information is not found on the do not call list? And if they ask it that way, answer would be social security numbers. If they ask which of the following information is found on the do not call list, answer is phone numbers. That's what they list on the do not call list, so they know what numbers not to call. And last question related to this is, what was the purpose of the do not call list? What was it? To prevent what? Prevent telemarketing calls. So there are 4 easy questions out of this law area. First 2 related to telemarketing sales rules. Last 2 related to the federal do not call list. So we see those in there. So under the 1 through 4, highlight the times 8 to 9, a.m. to 9. And that's of the time zone in which the call is received, because these call centers, they're making calls all throughout the U.S. So they've got to be careful of that as well. Next heading is the CAN Spam Act. So similar to telemarketing sales rules, but what they're trying to deter with the CAN Spam Act is spam email marketing. Is actually now against federal law. Unless, so let me clarify. Is spam illegal? It depends. Spam email is illegal if it does not follow these guidelines. The Act has 3 provisions to which spammers must adhere. 1, unsolicited emails must be clearly identified as solicitations or advertisements for products and services. 2, senders must provide easily accessible, legitimate means for recipients to opt out of receiving future messages. 3, unsolicited emails must contain legitimate return email addresses as well as the sender's postal address. Okay, now I get tons of spam email. None of it follows those guidelines. So this law, which went into effect back in 2004, that long ago, really hasn't had any effect on spam email that I've ever seen. But nevertheless, that's the federal law. So if you have questions on the exam, is spam illegal? It depends. If any of those 3 things are not there, then it's against federal law. Fraud and false statements. Okay, last thing here, and this you might have a question on the exam. What this had to do with was people running insurance companies that were filing false financial statements with the states they were operating in, looting the insurance companies, causing the insurance companies to go broke, and then taken off. So this fraud and false statements under Section 1033 of the United States Code addresses these people engaged in the business of insurance whose activities affect interstate commerce, meaning they're doing business in more than one state, such as the writing of false financial statements, embezzlement of insured funds, or writing of threatening letters to regulators. Persons convicted of such crimes may be fined and or imprisoned up to 10 years or both, and are prohibited from obtaining an agent license without prior approval of the commissioner. That's the only question I've seen related to this. And on the exam, they referred to this person as a restricted individual, which means they'd been convicted of violating Section 1033 of the Code. So they were a restricted individual. They wanted to do business in the state. They wanted to get a license. Whose approval did they need? Well, whose do you think? The commissioner. Only with the commissioner's approval could they get that license. And that's the end of this section. You're going to have key facts after this section. And as I mentioned, if you're doing the Life and Health Texas exam or Property and Casualty, you're going to have another section or another couple sections that you're going to have to study related to law. Law is very important, but in the other sections there's not really much concept. A lot of it's review of what we covered in the regular portion of the video course. So that will be the end of this video. And if you have any questions, remember to contact us, link above, and we'll be happy to help. Good luck on your exam.